Welcome to our More Kingston Smith webinar on the changes to creative tax reliefs. My name is Gary D'Souza, and I'm a director in our specialist media office based in Soho. Joining me on screen today is Claire Robinson, who is one of our tax directors in the media team as well. So as I scan through the attendee list, and thank you for those of you for sticking around through our issues, I can see we've got a lot of clients tuning in, which is obviously brilliant. A lot of production companies, some from the APA as well, and a few professional services firms. So we hope that you're all able to take something away from today's session. Quick bit of background for those on the webinar who don't know who we are. So More Kingston Smith is a top 10 firm of accountants, providing a wide range of compliance and advisory services, including audit, accounting, payroll, corporate and personal tax compliance, corporate finance, and many more services to support our clients. Along with our media team of approximately 120 people in our West End office, we work with many different types of media businesses. So for us, media consists of three key sectors. The first being marketing communications agencies, the second being theatre companies, who tend to look after a lot of the shows in the West End, and third, and most relevant to this session, are companies in the production sector. So we work with many companies who produce shorter format content like TV commercials, music videos. We also have clients who produce longer format TV series, documentaries, and films. And we also work with many editors, VFX and post houses, a few of the studios, and some in front of camera talent too. More Kingston Smith is part of the More Global Network, which is one of the largest accounting and consulting networks in the world. From my last check, our More Global Network operates in 112 countries in over 500 offices. So being part of the More International Network allows us to seamlessly connect to member firms in key media locations such as Los Angeles, New York, and all across Europe, Latin America, and Asia. That's probably enough background for everyone, so we can get stuck into the main event, which is all about creative tax credits. So for the accountants tuning in, you'll be pleased to know that we also have some numerical examples that we'll go through where we compare the new and the old regime. So just quickly starting off with a stat from the 2023 publication from the BFI, so the British Film Institute, a record £6.3 billion was spent on film and high-end television production in the UK in 2022. That's 6.3 billion, which is an increase of approximately 11% from the year before. The UK's film and high-end tax TV reliefs are widely recognised as the most transparent and reliable production incentives in the world. I know the government are doing as much as they can to assist and support the production industry, and in the form of these new audio-visual expenditure credits, the UK will hopefully continue to remain at the heart of the production world when it comes to international TV and film. So before I start to infringe on some of Claire's information, this is probably a good time for me to hand over. Hopefully our IT issues will fall away, and I'm just going to start sharing my screen. So Claire, over to you.
Gary, and thank you everyone for coming to this webinar, and apologies again for the technical issues we've had. As Gary has said, what I'm going to talk to you about today are the key changes to the creative tax reliefs, which have started to be introduced from the beginning of this year. In terms of kind of background around the reform, the biggest change is the format of the current film, TV, and video games tax reliefs, which are now going to be dealt with by way of an expenditure credit. There have been some other kind of smaller changes around details, which we'll get into as well. These were first announced by the government about a year ago, after a consultation period. And I think kind of the key factors around that consultation, which the government were pointing to, is to kind of simplifying and modernising the current tax relief regimes, which have kind of been in place in some form or another since 2007 with the film tax relief. I think there's clearly still a real kind of push from the government to support and incentivise the production of British films, TV programmes and video games, and that was kind of really clear throughout all the consultation. And there was a clear focus on making sure that any relief and any changes to relief didn't kind of impact the generosity of the current credits and what was available. And certainly in the case of animation and children's TV, we've actually seen a boost in ultimately what people should get back. And I think that is focusing basically on those two sectors as two really important areas. And also there was awareness that we may have been losing out in the UK to kind of jurisdictions with higher credit rates, particularly around animation. In terms of transition, as is the case whenever we have kind of big changes in how any relief is administered, there is a transition period. Currently, the new kind of credit regimes, so the Audio-Visual Expenditure Credit and the Video Games Expenditure Credit, are wholly voluntary. Companies can choose to use them if they wish. That is going to become compulsory for any new productions in video games from the 1st of April 25. And what we're looking at then, what's kind of the relevant date is for films, TV programmes, is looking at when principal photography starts. So if that date falls after 1st of April 25, then you will have to use the new regime. And for video games, it's when the production period has started. Then from April 27, the existing regimes will no longer exist. So every company will now have to kind of operate under this new credit. At the moment, if you've started video production or if you have started programmes or films, you are able to use the regimes if you wish to. And how that is dealt with is basically you will any expenditure incurring up to December 23, you would apply the old regime, and then going forward, looking at expenditure post January 24, you can then apply for relief under the new credit. So in terms of, before we kind of get into the how the new regimes will operate, I thought it would be useful to kind of go through the existing regimes and kind of recap on the conditions, etc. A lot of which are still going to be applicable, whilst the new rules will change how you ultimately get the credit, the kind of everything, the foundations, and working out if you are a qualifying company, qualifying film, programme, etc. That is going to stay broadly the same. So it's not that kind of everything is going to be completely different, and it will still be applicable to you. So I'm sure a lot of you have experience, practical experience, I expect, of the current tax relief regimes, of which there are a number, which have been introduced kind of at various intervals since 2007 with the original film relief regime. So we've got the film tax relief, the 3 television tax reliefs, a video games tax relief, and also 3 cultural tax reliefs, which is focusing on theatre, exhibitions and orchestra, but we're not going to be touching on those because they haven't actually moved to this new credit system as yet. So if we kind of go through them, I'll briefly touch on them all, but I think it's important to understand they do all follow a very, very similar format in terms of what companies qualify, in terms of what how the relief is operated, and what kind of programmes, video games, films qualify. So for the film tax relief, you must have a qualifying film production company, which is producing a qualifying production. Important to understand that you can only have 1 film production company for every single film that's produced. So you couldn't have 2 different companies claiming for expenditure on the same film. And that film production company that will qualify is the company that is effectively responsible for producing the entire film. So it's responsible for the key, what we see as the key production phases. So the pre-production, shoot and post-production, and then delivery of a completed film. It is understood that it's kind of common sector practice to subcontract out to some activities, which isn't prohibited. What you do need to make sure of, though, is if you are kind of using other parties to complete any of the activities that you, as the film production company, does retain oversight over that, and you must be actively involved in any decision making. Once you're happy that you are the film production company, a qualifying production for these purposes is looking at films that are intended for theatrical release. So that's at the public commercial cinema, and it's also focused on British films. And what kind of is determined as British is via application to the British Film Institute, and they will ultimately rule on whether you will qualify. As well as being British, there's also a minimum UK expenditure requirement, so at least 10% of core expenditure must be in the UK. And what we're looking at there is expenditure which is used and consumed here. And used and consumed really follows the activity of the filming. So, for example, if you had a film and all production activities, so pre-production, shoot and post-production, took place in the UK, then generally you'd be happy that you had only UK spend, kind of regardless of whether you were using non-UK suppliers or goods were coming from outside of the UK. You're really looking at where the filming activity is taking place. And then if we move on to the television tax reliefs, so there's kind of three separate reliefs within the broad definition, targeted at slightly different things. So you've got your high-end television, your animation, and your children's television. Again, very similar criteria to the film tax relief in terms of having a single television production company that's responsible for everything. Here, and also in terms of the British requirements and the minimum UK spend. Here with television, obviously the focus is not on cinema, it's focus is broadcast on television, including through the internet. And then the slightly different focuses. So you've got the high-end television, which is where you're looking at minimum slot lengths and a minimum spend, which is £1 million per hour of slot length. And then your children's TV, which is focused on programs which are aimed at under 15s, and animation, where at least 51% of the spend is spent on animation. And then again, moving on to the video games tax relief. Here we're looking at video games development companies producing qualifying video games. Again, very similar in that you can only have one that's going to be able to claim the relief, and similar in terms of the UK requirements. Just a point to mention on video games is that while subcontracting again is allowed and is accepted, that certain activities can be subcontracted, here there is a kind of a cap, so an absolute maximum that can be spent on subcontracting activities, which is £1 million. Also, to point out a slight difference, on video games, is that the focus under the old regime has been on European expenditure, and that you must have at least 25% of core expenditure in Europe rather than the 10% UK. But as you'll see, as we kind of move on, that is being refocused. So the 25% European is going to move to a 10% UK. So that is kind of bringing that in line with the current film tax and video games, TV tax relief. Just to point out that it's not, when you have kind of your costs of producing a film or video game or TV program, it's not everything that qualifies. What government are giving relief on is what they consider to be core expenditure. So, I mean, I've got on the slide here what is classified as core expenditure, and it's basically looking at various phases of production. So for film and TV, what's considered to be core expenditure is any spend from pre-production through to post-production, basically until the film or TV program is completed. So it doesn't include costs of kind of distribution or anything around marketing, etc. It also wouldn't include any costs up to the point where you are satisfied that a film or TV program is viable. So any kind of speculative development costs aren't qualifying. Video games, I mean, similar in terms of it's trying to capture the actual production. So for video games, we're looking at design, producing, and costs around testing. Again, excluding kind of post, once you've got to a completed game, it kind of excludes anything post that point and speculative development. Across all the reliefs, there's various costs that just cannot be qualifying. So as I've mentioned, anything around kind of publicity, promotion, entertaining, as well as certain audit, legal costs, etc. So it's not everything. It really is focused on the producing costs. In terms of the BFI certification, so I've mentioned that you have to qualify as British, and it's the BFI that ultimately decide if a film or video game is British. Again, I'm sure a lot of you are familiar with this process and have submitted various applications to the BFI. But basically, they have a cultural test, which is on, it's a points-based system, and they have various areas, which are on the slide here, in which a production can be awarded points, and there's a minimum amount that you must achieve in order to pass that test and qualify as British. You can't submit a tax credit claim without BFI certification, and I know that can cause kind of delays in it, particularly at the moment. The BFI lead times are quite long. I think the last I saw was they were saying around 18 weeks. So I think it's important to make sure that you're kind of on top of that. I think they are trying to reduce that time, but at the moment it is still quite slow. So once you're happy that you qualify, so you're a qualifying film production company, TV production company, you've got a qualifying production. In terms of how the existing regimes kind of you can obtain relief, what you would do is you separate out your production activities. So you'd get, for example, if we're looking at a film, you would get all your income and costs from that film, and effectively create a separate kind of profit and loss, to ultimately get to whatever you think the profit or loss of that film is. Once you've got to that, it's at that point where you can obtain tax relief. So if you have the actual profit or loss, you then are entitled to an additional deduction against that profit or loss. So that could reduce your taxable profits, or it could increase a loss, and that additional deduction is calculated either as 80% of total core expenditure, so core expenditure which we've just run through, or 100% of your UK core expenditure, and then it's the lower of amount that you're entitled as a further tax deduction. To the extent that that tax deduction either created a loss or increased the loss, the company would then be entitled to a potential repayable credit, which is calculated at 25% of the loss or the qualifying core expenditure. So by the qualifying core expenditure, we're talking about basically what the additional deduction was. And again, that is a lower of. So you can see kind of under the old regimes, it's kind of a two-stage process. Firstly being this deduction, and then the credit, and we will get on to why that's how that's different under the new regime. Just to briefly touch on losses of production trades. So where you have, again, if we use film an example, where you have your specific film production trade and you've worked out your profit, you've worked out your additional deduction, etc. Any losses that are within that trade, either that were actual losses, so because the production itself just isn't making any profit, or which have been created by this additional deduction, they must be carried forward in that separate trade until that film is completed. So you don't have kind of flexibility to move those losses around a company. So for example, if you had film production activity and you were making profits there, you wouldn't be able to offset the loss of the film production until the film was completed. At the point a film is completed, the losses do become more flexible, and any actual loss, and when I say actual loss, I mean basically your income less your costs without any tax relief, you can use those losses against other profits. You could also relieve them. So if we move on then to talk about what hasn't changed, and which is, as you can see, quite a lot. So the focus, even under the new regimes, is still around single production companies that have responsibility for the entire productions. That hasn't changed. There's still a focus on core spend. That is what the government are trying to reward and incentivise in terms of the actual production spend itself. The maximum cap on the relief, basically it being 80% of your qualifying spend, continues to exist. There have been some small changes around slot length and kind of tightening around a documentary definition, which I will talk a little bit more about, but other than that, broadly kind of what qualifies is the same. So there hasn't been kind of any expansion on that, but also hasn't been any tightening. And there's still the focus on British, which makes sense. I mean, the government is trying to encourage British filmmaking. So there is still the BFI application process, and kind of the point system is exactly the same. You need the same amount of points. And you still have the minimum UK spend for film and TV. And as I said, that is now going to be mirrored for video games. The loss relief provisions also remain identical in that losses are effectively ring-fenced until a production is completed. And then, so we'll move on to talk about the new expenditure credits. I am conscious of time, so we will go through them quite quickly. But if any questions come up, then please feel free to get in touch with me or Gary. So I think the main kind of change here is around how the mechanism for obtaining credit, basically. So as I said previously, under the old regime, you had the process where you would have an potential additional deduction followed by then potentially a credit. That will no longer apply. So every company that's claiming these under this new regime, whether you're profit making, loss making, you automatically calculate an expenditure credit. That expenditure credit goes in what we'd say is above the line, which basically says any credit that you get goes into your taxable profits and then is subsequently taxed to kind of end up with the net credit which you may be due. Once you've calculated a net credit, you also then are required to kind of there's some offset rules. So, I'm going to go through examples which will make this clearer, but you are required to offset any credit you receive against other corporation tax liability in the company, and also other tax liabilities. So, for example, VAT, PAYE. You can also choose to surrender it to other group companies' liabilities. I think important to see here, so the amount of the credit, this is where it is calculated still on the same expenditure which you will recognise from the additional deduction. So what we're still getting credit for is the core expenditure, and again, as I said, that is still capped at a maximum of 80% of that core expenditure. So in terms of the rates of the new credit, the headline rates appear to have gone up quite significantly. So if we're thinking about the old rate of credit, which was 25%, if you look at the headline rates, you've got 34% for film and TV and video games, and then 39% for animation and children's TV. As I said, these credits come in above the line, which means they are going to be subject to corporation tax. So what that means is kind of your effective net rate, whilst it's still higher than the current rate of 25%, it's much kind of a more modest increase apart from the animation and children's TV, which there has been a 4.5% increase. just to run through a couple of examples, just so you can see how this will operate and how this is different to the existing regimes. So I'm going to show you an example of a profitable production company, and then also a loss-making we'll come on to, just so you can see how it operates slightly differently. If I run through quickly first, this slide here, on the right-hand side, which is what I'm sure you'll all be familiar with, and this is how the current tax relief would operate for a film production company. So here we have a film production company that has incurred costs of 100 million that were all core expenditure and all UK core expenditure, and has received income of 200 million, which gives a profit of 100 million before any tax relief. So under the old regime, what that company would then be entitled to is an additional deduction to reduce those taxable profits. And that additional deduction is calculated at the lower of 80% of total core or UK. Since we have only UK expenditure, we're going to be capped at the 80%. So we get the additional deduction of 80 million, which is ultimately reducing our taxable profits down to 20 million. Meaning we pay less corporation tax, and we have a corporation tax saving in this instance of 20 million. If we then have a look at how the same company would obtain relief under the expenditure credit. So again, we include our income and costs of the specific production, but here we are getting the audiovisual expenditure credit above the line, calculated at 34%, again, of this 80 million, so of the 80% cap on the core expenditure, which, as you'll see, is the same figure as for the additional deduction. So if we calculate that credit 34%, that is an additional amount of 27.2 million that goes into our taxable profits. We calculate corporation tax on that to get the 31.8 million, but then we take off the credit, which we've calculated up here, to get to our ultimate corporation tax liability, which gives us a slightly increased corporation tax saving of 20.4 million in this instance. So if we move on to looking at loss-making film production company, again, if we quickly go through how you will have seen the relief operating currently. So here, because we've only got income of 50 million versus our cost of 100 million, we do have a loss before tax, any kind of tax relief of 50 million. We are then entitled to our additional deduction, which is the 80% of the 100 million, to get to an increased loss post-tax relief of 120 million. We can surrender part of that loss for the repayable credit. That surrender is limited to either your qualifying expenditure or your available loss. Since our qualifying expenditure is lower in this instance, we can surrender 80 million, which, if we apply the current credit rate of 25%, that gets us to a repayable credit of 20 million. Same company under the expenditure credit regime. Again, we have the same income and costs, but we are bringing in the credit, which is calculated in the same way as the previous example, above the line, which is ultimately reducing our loss at this point. Because in this instance we don't have any taxable profits, we are loss making. We are required to still apply corporation tax, so a notional corporation tax, to that expenditure credit amount, to bring us down to the credit repayable amount of 20.4 million. So again, because the credit is going in above the line, but we do have to subject that to tax. And so yeah, we end up with the repayable credit of 20.4 million. And if you did follow it all through, that is an effective rate of 25.5% versus 25% under the previous regime. So, I mean, I've shown you the example there for the film production company. I'm not going to go through the video games production company example with the video games expenditure credit. It works in exactly the same way. And I mean, you'll see for a quick flick, the numbers are the same. Obviously, if we did it for an animation or children's TV program, then there'll be slightly higher repayable credits. But the mechanism is the same. It's just a different rate that's applied. I have mentioned that the kind of various steps that you need to go through to determine what credit a company can ultimately get, which is different from the old regime, where basically once you had your credit amount, that is what you were paid. But there's various offset rules which you kind of have to run through sequentially. So there's 6 steps here, which I'll quickly talk through, but basically you follow through each step. So if you start off at step 1 with kind of your credit that you've calculated, being the 34% or 39% of your expenditure, first of all, that amount is offset against corporation tax liabilities of the current period, which is what you would have seen, what you saw in my example 1. So in that case, we had a corporation tax liability which effectively ate up all of the credit, so we didn't ultimately end up with any credit. If you offset any corporation tax liability and you still have some left, then you move down to step 2, at which point you then have to apply the notional tax, which we saw in example 2. So you still have to tax that credit. And then what will follow through to step 3 would be the lower of kind of what was left after offsetting any corporation tax liability, or what is left when you apply a notional tax charge. Just to point out here, any notional tax liability that comes about as a part of step 2, that is withheld, but you can use it. So you could use it against corporation tax in future periods to offset, or you can choose to transfer that to group companies. So you can't get it paid out to you, but it isn't completely lost. Once you've got down to step 3, if you've still got anything left, then that must go against corporation tax liabilities of previous periods. So if you've got any outstanding tax, that would be taken off. After you've done that, you then get the option, this isn't a requirement, you can choose to offset that against group tax liabilities, if there are any. Then we follow it down again, anything that's left, you must use against any other tax liability. So any outstanding VAT, PAYE, that must be offset. If you get all the way down to step 6, and you still have credit remaining, then that is ultimately the amount that gets paid out to you. So yeah, it is a slightly more involved process than you may have been, well, that you would have been used to under the current regime. And then if we move on quickly, just to very briefly talk about other changes which have been introduced kind of around more specific factors. So, I mean, the minimum slot length for TV programs, which under the current relief is 30 minutes, will be reduced to 20 minutes. That is only going to apply if you're operating under the new credit regime. So if you were choosing to continue with the old tax reliefs, you would still have to follow the 30 minutes. And there's also been a tightening up around the documentary definition, which is going to apply across both regimes, so under the new credit regime and also the current television tax relief regime. And I won't read it out, but you can see what the specific definition is there. And then in terms of video games, the main change here is around the refocusing to UK expenditure. So that is to bring the relief in line with the current conditions for the film and TV tax reliefs. And also for the video games expenditure credit, so not the previous regime, the £1 million per game subcontracting limit is going to be removed, which again is bringing the relief to be more in line with this green sector tax reliefs. There has also been some tightening up around connected party transactions. So now there is a kind of a stated requirement in the legislation that this is done on an arm's length basis. So it's going to be quite important for companies to maintain records of any connected party transactions and how they can kind of support that everything is taking place on an arm's length basis. This is actually kind of much better than what was originally put forward, where there was some intention to kind of restrict what was called connected party profit, which would basically mean that a lot of kind of transactions between connected parties could only take place at cost. There could be no market value uplift on that. So what we've actually got in the legislation is, well, in my view, more sensible, and it does really just follow kind of general principles around transfer pricing, etc. One thing to be aware of is that you are also going to be required to disclose your connected party transactions to HMRC. So it clearly is an area which they are interested in, and there's possibly more scrutiny around that. Also, there's some further admin around making sure you have got the correct records to give to them. So just very, very quickly, moving on from how kind of the relief works, just to talk around kind of what to think about in the transition period, whether you should or shouldn't kind of move straight away to the new regimes. I think probably a very obvious point is that the credit rate is slightly higher if you did choose to move from the old regimes. Appreciate for film and TV, this is, well, film and non-children's and animation, this is quite modest. I mean, you're talking about 0.5%, but for the children's and animation in particular, you've got an additional 4.5% there, which you could potentially get back. Also, a fairly obvious point is that you may only qualify under one of the regimes. So, for example, if you've got a TV programme which is under 30 minutes, then you aren't going to be able to qualify under the existing regime. You would only be able to claim under the Audio-Visual Expenditure Credit, which with the reduced 20-minute slot length. Another point to be aware of is that you can't claim the new expenditure credits if you could also qualify for research and development on the kind of spend. So under the existing regime, you can't claim research and development relief and film video game tax relief, but you can kind of make the choice yourself. Under the expenditure credits, if you qualify for R&D, even if you don't claim that R&D, you couldn't claim under the expenditure credit regimes. Just kind of some other points, which, sorry, Gary, if you just go back to just some other points around what you might think about in terms of whether the expenditure credit regimes are right for you right now. So there's some points to consider around your cash flow planning. Obviously, there's automatic offsets if you're using the expenditure credit, so for other tax liabilities, etc., which might ultimately reduce the credit you get back. So it's important when you are doing kind of your cash flow forecasting, etc., that you are taking into account that those are kind of going to come off automatically. And also you can think about whether a group relief surrender of that credit is going to be beneficial to you. Appreciate that is a choice. But again, if you're kind of group cash flow planning, then it is a point to think about. At the moment, while we're in this transitional period, it might be that you have kind of started claiming under one regime, and you may decide, well, instead of kind of having to start worrying about apportioning costs, etc., administratively, it's easier just to continue with your current video games programs under the old regime, albeit that there might be a slightly reduced credit rate, but it might just end up that it seems easier for you to do. Kind of a point to think about, and we won't really know this until the new regime, HMRC, start administering under the new regime, but there has been some talk around whether there's going to be delays as we transition, particularly whilst HMRC are currently having to operate two separate regimes. for the sector. So I mean, that's probably just an awareness point really, and just make sure that in terms of cash flow planning, etc., that there may be some additional delays. Again, yeah, we won't know. HMRC haven't come out and said anything on that, and we won't really know until these claims start to go in, when we might have more of a take on how long things have been taking to process. And then finally, in terms of your accounts, obviously with the credit coming in above the line, this is no longer going to sit in the tax line. So particularly in the first year, which you adopt and move across, it does mean that the presentationally your accounts are going to look different, and may also impact on kind of group accounting policies, etc. But again, that's just a point to be aware of as and when you do move across. And then very quickly around administration, the new regimes at the moment are voluntary, as I've said, so you do have to elect into it. Practically, that election is going to happen in your corporation tax return. It's not, there's no separate requirement or anything like that, but you will be kind of electing in rather than it applying automatically. Probably more important to be aware of is that now there is a specific supporting information form which is going to be required to be submitted. That is outside of your tax return. Companies can submit it themselves, or agents, your advisors, can do it on your behalf, but it is in a separate process. And if you don't submit that form with the information in it, then HMRC won't process the credit claims. I mean, certainly in the claims that we're submitting, all the information that HMRC are requesting, bar connected party transactions, I suppose, we would be putting in anyway, but just to be aware, that is a separate process. And I mean, I've touched on what connected party information is, but that is also required to be submitted. And if it isn't submitted, then it won't be processed. Okay, so that was a very quick run through. Appreciate we don't have time for questions at this point, but if you want to put anything in the chat, then we will come back to you. And also you've got mine and Gary's details on there. So yeah, anything, if you want to drop either of us a line, then we will happily come back to you on any queries. And thank you again for bearing with us through our technical issues.
I guess one final comment. So everything that Claire's gone through, especially for the clients within our West End office, this is obviously a very specialist area of tax, and I strongly recommend any clients to speak to your manager, your partner, and for those who are joining us today who are not clients, to reach out to Claire and myself. Our email addresses should be on screen at this very moment. So once again, apologies for the delay in starting today's session. Thank you for joining in, and we'll see you next time. Have a great day.
Thank you.